Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is the FX Rundown. Tomorrow's Fed Day, and what was going to be a more or less dull meeting, everybody's going to be listening to what the Fed has to say about coronavirus. Now, China is a much larger portion of the world GDP than they were back in 2003 when SARS hit, and the Fed did have a little bit of a delayed reaction before talking about the SARS hitting and the potential impact to the world. So we do expect the Fed to acknowledge it. Fed Chair Powell is probably going to receive questions on it in his press conference afterwards. But ultimately, do they pull back a little bit from what could have been a slightly bit of a hawkish stance? We don't expect them to be hawkish. We don't expect them to turn dovish. They're going to try to play a middle ground. But we could hear, if anything, a slightly more in line narrative, that slight dovish in line what we've heard in the past. This could decrease the value of the dollar, lift treasuries up just a little bit. So that's what you have to be on the lookout for. But overall, some of the data points have been better. Consumer confidence tape was a great number. Richmond Fed manufacturing was much better than expected. Still, though, durable goods was a miss. December's number was bad. What made it worse was the fact that November was revised much lower to a contraction of 0.4. So manufacturing still is a question mark, and that is a reason for the Fed not to become more hawkish. That we do have some new 2020 voters, so we'll have to hear what they have to say. Everybody will keep an ear to the ground. But if they are hawkish, which we don't think, that's going to push the dollar in a little bit of a breakout, the dollar index out above 98. So that's what you got to watch for. The euro is hitting some support down at 110.15. That's a previous low. So we're pushing some pretty interesting levels. But do they break out or do they stay more range bound? For us, we're looking at in our Trade Alerts program, we do have short exposure to the British pound through puts. And the British pound is trying to push through a little bit of a trend line there, but you also have the round 130 area to keep an eye on. So watch that British pound. The dollar increases in value. That's really going to be great for our Trade Alerts program, and you're going to see the British pound decrease likely. Now, as well, you do have the Bank of England on Thursday, so they are coming around the corner as well. Another thing to look out is the yen. You're seeing equity markets rebound today. You're seeing some risk sentiment rebound a little bit. Energy has as well. The yen is down today. The yen has been really peaking at lower highs, so we do see a trend line going back to 2015 in the yen. We've talked about it before. 90.50 is an area to keep an eye on if risk sentiment continues to pick up here as the way it did today and into tomorrow. That could push the yen, if the dollar increases, could push the yen to new lows over the coming session. So keep an eye on that. Another trade that we put out today that we're seeing here with our team on the research side is a trade signal buying the Aussie dollar. Very tight stop. Give us a call if you want to know more about that Aussie dollar trade. And then looking at the Canadian dollar. Below 76, the path of least resistance is towards about 75. So keep an eye on the Canadian dollar there. Energy is recovering. That has helped the Canadian dollar hold ground just a bit, buoying it. But right now, again, remember, below 76, path of least resistance lower. And lastly, look at the Swiss franc, 103. You don't want to see this hold 103. We like the Swiss franc long term, but for now, it has found a little bit of a move lower. Must hold 103. So in the end, what really matters is what the dollar does tomorrow and what is the Fed's stance. We don't think they're going to be very hawkish. We don't see them being very dovish. They're going to play a middle ground. If anything, they could show some concern for coronavirus, and that could be taken as a bit more dovish than anticipated, and that overall could increase risk assets because they're worried about the impact of global growth. Ironically, yes, it could increase risk assets, treasuries, and it could weaken the dollar just a little bit if they take that route. Give us a call. We're here to help talk about it. We're here watching it. Remember, futures trading is not suitable for all investors. It involves a substantial amount of risk.